Good morning, traders. Manny Cabrera here, founder of MDC Trading Academy, with today's pre-market forecast for Wednesday, June the 28th. And of course, it's FOMC day today as we look at our news items for today. We begin 10:30 with crude inventories, and obviously 2 o'clock the FOMC statement, federal funds rate, and of course the FOMC press conference. So you're going to see that reflecting in the market today. As we look at our charts, we can see the market's kind of pausing here in reference to movement right now. We do have an update, but slightly up on the S&P 500. We had a little spike in our volume yesterday due to some really good activity in the markets. The markets continue to show a lot of resilience to the upside as we establish a new all-time high. And yesterday we ended up with a downside. Now, once again, we find ourselves in the pattern where we have ourselves price action is happening between two key areas: the all-time high and obviously the 20 SMA. We broke out of this F flag lower to the 50, shot right back, established new all-time highs. This is where you find ourselves. Volume continues to be very, very, very healthy. Yesterday was a very healthy day. Volume wise, there was a lot of good range, a lot of movement. We've increased our ATR, which means that our ranges are much wider, which provides for more activity in the S&P 500. Let's look a little bit more behind these numbers. An interesting thing that's happening here, it's a very similar pattern, establishing an all-time high as resistance, breaking above the support, launching us as clearly above it. Once again, here's the pattern again. There is our support level. Launch ourselves from that, come back, retest it, boom, and here we go again. Now we're coming off this previous support level after we broke our trend line. Look how the trend line that used to keep the market up, once it broke behind it, it kind of snuck behind us, and the market used it to launch to these expected support levels. Now we're expecting, obviously, the market to move a little higher. Again, remember, these patterns are summer patterns, and you sprinkle in some really heavy volume and heavy volatility days, and it makes for a very interesting summer. The key to trading this summer is adapt. You need to learn to adapt. You need to be able to understand what your volume looks like in the pre-market to determine whether you're going to see more activity or less activity, and make sure you adapt to that. Let's move to our analysis chart so we can get closer to our trading for today. And as you can see, here's where we find ourselves right now. There's your all-time high. Here's the intraday low of yesterday, established late in the afternoon, bounced off, quick recovery back to the original, one of the original resistance areas. Market kind of runs, establishes a support and resistance channel, breaks above with a FOMC, creates another FOMC, and pretty much dances around there until it's giving us a very clear indication that it may have some more potential movement to the upside. So we're expecting as our first scenario potential continuation to this particular level here. This should probably be one of our first tests, and of course any break above this level, we're expecting potential support here for more continuation. Now remember, everything's happening within this area here. Any break below this trend line, we're expecting the market to move potentially further down here. Now remember, this may all happen, but it may happen later in the afternoon. I doubt we're going to have a lot of heavy activity in the beginning. Remember, it's FOMC day, so investors are pretty much sitting back, just checking to see what the Federal Reserve is going to say in reference to interest rates, in reference to inflation, and its monetary policy. So keep your eyes open for this report. Watch the reaction, and please try to stay away from the markets in the middle of the announcement of the report, and more importantly, during the press conference. Take care. Have a great session.